consolidate and build the foundation for a move to much higher prices. Special situation. HECLA Mining. On January 15, 2022, we published a silver report at St. Alpha to discuss buying HECLA Mining shares. We believe that it is an explosive stock since HECLA produces about half of America's silver production. It is the oldest silver mining company on the New York Stock Exchange. HECLA was about 508 in January when we made the recommendation. The stock then went up to 766, which almost met the target the DCPMI predicted. It then came back down to a level of support, so that low as another buying opportunity. The new low was 458 before running back up to 766 on the first leg of the moving pattern. This is the first leg of a major move up for HECLA. We now see some profit taken and a move back down to another area of support. This is an area to add to your HECLA position. We are buying HECLA because of the potential shortage in silver that is on the horizon. We have not yet seen the full effect of the supply constraints in precious metals yet. MontesDeOca said. I am focusing a great part of my portfolio in HECLA since we are buying an undervalued silver mining company. This is a buy and hold stock. We recommend buying HECLA on the dips and holding it for the long term. The prices for precious metals, gold and silver, still have not yet fully recovered to their real mean based on the fundamentals, world debt, interest rates, and inflation levels. Expect them all to run up significantly.
Good morning, everybody. This is Patrick MontesDeOca with live trading standard deviation here at the Equity Management Academy. We're looking at a live signal that we took this morning in the gold market. We recommended all our traders here to buy gold. We're long gold at 1942, 1943, and it's a weekly signal. Activated by the weekly extreme below the mean level of standard deviation by one level of 1942. We're going to get a little more technical here in terms of what we do than the simple, you might say, presentation that appears to be pretty one-dimensional. In fact, in looking at the algorithm itself at face value here, it has a tremendous combination of different indicators. Standard deviation. First of all, we're talking about the average price, which is basically the mean or the average price. And we're looking at the weekly and the daily signals, with the market trading above the daily average of 1919 and below the weekly average of 2011. So it is kind of a mixed signal here that we get in between the daily and the weekly, but the market is reverting from a low that we made of 1895 as of yesterday. The expectations that we had coming into this week is that we want to buy into this blue level. It represents accumulation of supply. This is where you buy your inventory. You add your inventory so that when the price goes to the extreme above the mean weekly of 2011 and possibly at the extreme above that mean, which is all the way up to 2129 once again, using the weekly numbers. The price daily is entering a level where it's called resistance. And what is going to determine the movement follow through up or down is basically going to be the amount of buyers or sellers that we find up here. And so it's a question of whether we have stronger, weaker, I would say, buyers weekly or daily sellers. When the price trades above the resistance level, that resistance level becomes support. And in this case, the market trading above 1940 is the support. Now, that essentially activates 1953, which is the initial target that we're looking at. The weekly signal above 1942 is activating 2011, which is the weekly target. HECLA is up 37,699. The featured stock that we are recommending and loading up basically as a big percentage of our portfolio is HECLA Mining. And I'm recommending it to my traders, my subscribers, that this is a great value at this point, regardless of any resolution of the Russian invasion, which continues. And it's an atrocity being committed. Regardless of that resolution, it appears that the metals markets, and particularly the silver market, is in an extremely oversold condition. And you have different instruments that you can trade those markets. You can trade the futures, you can trade stocks, you can trade options, you can trade ETFs. And in this case, we're looking at HECLA mining shares. We've been trading this on the long side since the 15th of January at about 508, and we seem to be obviously breaking out into the target that we're looking at on the weekly basis of at least 806. The 78.6 Fibonacci retracement is at 829. Now, if we get through 829, then the next target will be 944. And closing above 944, we're looking at a 161.8% golden ratio Fibonacci retracement of 1230 as the target. And we're looking at this as a long-term target for us. To intermediate objectives. Then we want to see, obviously, once we get up here, what happens to the market, but you're looking at extensions that point all the way up to 1712 on a 261.8% Fibonacci extension. We recommended, as you see on the 15th, to get long the market in HECLA. And so far, we seem to be breaking out as expected. We can also see here, if you are a technical analyst, a descending wedge, which is confirmation of a breakout within the expected by triggers that we had coming into this week of 645 all the way down to 606. He was recommending to buy this market. The first target of 706 is being completed. A close above 706 is activating 745 to 806. One of the comments that I would like to make from a fundamental point of view, obviously, we continue to see this devastating war, this Russian invasion continuing to demolish Ukraine. It is a devastating atrocity that is occurring. And as I said yesterday, Ukraine is a very strategic oil and gas reserves, which is really the reason why Putin is determined to conquer the region. The issue is at what costs this has taken place. These atrocities that are occurring. While NATO simply watches this, and so it's a pretty delicate situation that it is affecting the not only the geopolitical situation of the region and the Eurozone, but also affecting the global economic system, turning it upside down. As a consequence of all of this turmoil in the area here, we're running into shortages, particularly food. The area is responsible, Ukraine is responsible for about 30% of the world's grain production. Major natural gas, oil producer as well, with Russia next to it. These supplies are being misdirected, you might say, of the real market and obviously going into the black market. Even though the sanctions are in place, there's a lot of black market deals going on. One of the major developments here that has taken place is the Saudis are in talks with China. And there is rumors that the talks are going to lead into a replacement of the US petrodollar with the Chinese yuan as a petrodollar. The probabilities of that happening are extremely high just on the basis of the weakness of the Western world, the Western economies, politically and economically. This is causing inflation. It's exacerbating inflation faster than anybody was prepared for. On top of this pandemic. And it is having a major impact, a serious impact in the supply chain once again. So we're finding ourselves that there is tremendous demand for goods and services. The problem is there is no goods and services. People are not willing to work at current rates. They're demanding a lot more. The whole system is going through a recalibration, a transformation, and that is essentially because the dollar is simply collapsing in front of our eyes. We're running at inflation at about a 10% rate, while the 10-year note is paying about 2.16. There's a huge negative yield gap of about 5 points in the markets. Chairman Powell raised rates a quarter point, and it really it was not enough, you might say, for the markets to feel that they have control over the yield curve. The problem is, obviously, in the bind that the Feds are in, is whether interest rates moving up sharply are going to put the economy in a recession or stagflation. And on top of, obviously, what appears to be, once again, endless amount of money printing. Billions of dollars now are being diverted to the Ukrainian crisis as a consequence of the Russia invasion. Money that was not expected. So the Feds need to continue to print, even though the rhetoric is going to be of tapering, of reducing the balance sheet. When you take a look at the balance sheet of the Feds, it's exploding. The debt to GDP ratio in the US is over 120%, 130%. And the problem is that rates can't go up without causing a major recession. So it's a real dilemma in terms of the cost of money, which are basically directed by interest rates. If the cost of money goes up in this environment, more than likely it will cause a deep recession. And this is what the 10-year note, the 2 and 10-year note, the 10 and 30-year note are indicating. We have an inverted yield curve where the short end of the market is rising faster than the long end of the market. The 2-year is rising faster than the 10-year. And so all of this, I'm coming back to basically looking at the possibility that we're going to see a shortage of metals, particularly a shortage of silver. As it is right now, the supply and demand equation is beginning to put a lot of pressure on gold demand short term. We have record nickel prices exploding. And so what I expect here, my friends, my traders here in Discord, is an explosive move in commodities to the upside, unlike we have never seen before, and a continuation of the uptrend in precious metals, silver, gold, and Bitcoin is in the equation this time around. Gold, silver, and Bitcoin are going to have massive moves to the upside. So be prepared for volatility. And if you get a chance, like I said to my traders here a few days ago, you get a chance to identify the standard deviation using the VCPMI at high probability levels into, let's say, the blue zone of 25, 29, buy into the market. This is where you want to add to your long-term positions. Bitcoin is trading above the weekly and the daily average here. It has activated a bullish price momentum and a daily bullish price momentum. The targets above are 41,973 to 45,112. Continue to maintain your long positions as we can potentially see a massive move here to the downside on the US dollar, particularly if we continue to see support building for the yuan petrodollar. Thank you, my friends, once again for the opportunity to chat with you here. Let's see what happens here throughout today, and continue to be along here. And I look forward in talking with you the next time.